right, so do you really think that Wall Street traders, big bank traders, institutional traders are sitting around looking at moving averages crossing over, pivots popping, and SAR dots flipping? No, they're not. I'm gonna show you how banks are actually looking at the move of currency. How is currency being moved? What are orders being filled? What is it that makes the candles print? Because it's one thing to look at the candles print on the chart, it's another thing to know why they are printing on the chart. And that's what I'm here to do today, is to give you an inside view of my classroom where I'm teaching the students how banks and institutions, liquidity providers, market makers, how do they look at the market? Because if we're really gonna trade like the banks, then we need to think like the banks. And in this video, I'm gonna show you how to think like the banks. Make sure you hit that like button, comment below, let me know what brings you the most value, how this helped you to see inside bank movement, and hit that subscribe button. Make sure you don't miss out on all the content that I'm putting out. If you wanna become a student, go to tradinggetpaid.com and you can get inside the classroom. Don't wait for it to come out on YouTube. Don't wait for little clips. Come and get full live classes and all of the trading courses that I have on tradinggetpaid.com. Let's win together. Now let's roll that intro. So here's the thing, guys. Look, when they are putting their stuff together, let's say that they're trading GBP and they say, okay, there's X amount of volume being moved. All right, volume. And then we have the opposite currencies, the currencies that correlate and the currencies that are not in correlation. So for example, they may look at NZD and they may say, okay, NZD has this much volume being moved. USD has this much volume being moved. AUD has this much volume being moved. And then they start breaking down that currency and that volume. So let's say, like I said, let's say for GBP, we have 100, I'm just going to use simple numbers, going up, right? So 100 million buyers, and we have 23 million sellers. Okay, for NZD it's a little bit less, it doesn't move as much currency. So let's say for NZD we have 27 million buyers and we have 14 million sellers. And then for USD we have 200 million buyers and 110 million sellers. Okay, and then for AUD, we have 20 million buyers and 115 million sellers. So all of that looks crazy, don't it? However, if you're looking to buy this move for GBP, which one of these currencies are you going to be trading that day? I'm asking for open opinions here. Skylar says GA. Anybody else? No? The answer is very clearly GBP AUD. Now, all of that, now just for everybody who may not understand that, why is that? If GBP has a strong push up, meaning that there are 4 times, look at this, 4x the bull move or the buyer momentum than there is seller momentum. I have 2x buyer momentum here, 2x buyer momentum here, and I have about just under 6x seller momentum here. So if I want to go here and I want to buy GBP, why would I buy it leveraged against a currency that also has strong buy momentum, when I can leverage it against the currency that has strong sell momentum? So if I have 100 million units of currency being moved up and 23 million units of currency being sold, my net strength here, is that I have a 77 million unit of currency strength in my analysis. On AUD, I have 20 million being bought and 115 being sold. Okay, so what is my net here, right? Is that right? 95, yeah, 95. My 95 net sell, net units of currency in in sell positions tell me that I am going to have a strong move on GBP AUD. Does that make sense to everybody so far? If I need to slow down, I will. I just want to make sure we're all on the same page. To be clear, this is the language that they speak on Wall Street. They're not talking about pivot points, 50 moving averages, moving average crossovers. They're not talking about parabolic SAR dots. They're not talking about any of that stuff. In fact, the only real true indicators that are used at that level are the oscillators, the momentum oscillators. Exactly, Derek, you hit it on the head. They're talking money, not pips, right? But the problem is we're talking pips and not money, right? So if we're gonna talk money, we don't have the level of currency and the volume and the money that these big banks are trading with. I don't have, 115 billion to step into the market with. I might one day, but right now I don't got no 115 billion to come into the market with, So you got to ask yourself, how do I convert the language of money into the language of pips and into the language of day trading, scalping, and retail trading? That can't be just saying when this dot does this or when this line does this, right? So what does all this mean? Here's what's awesome about it. All of this really would just play out as GBP, AUD, and it would be, let's see, 77 up, 95 down. What's 95 and 77? 160, 172. So that would give you a strength, a net critical mass number of 172, okay? That would give you a net number, a supply and demand number. This is how many orders are in the market. This is how many orders are in the market. Now, how does that help us? Well, it's very simple. They are doing the same thing we're doing. All they're doing is converting currency. When you go and you travel to an airport and you're going to another country, what do you have to do? You have to go to the exchange and do what? You have to change your money, US dollars. If you're in America, you got to change your US dollars into the local currency. When I went to the Philippines a couple months ago, I took my US dollars and I traded them in for Philippine pesos, okay, at whatever the exchange rate was. And I was there 17 days and the exchange rate fluctuated in the time I was there, right? So here's what happens. If the net number is 172, 77 buyers and 95 sellers, that doesn't mean that every one of those orders was from this currency to this currency. That 100 right here and that 23 right here that gave us that 77, that may have been, let's just analyze the 100. That may have been 50 to US dollar, 25 to NZD, and 25 to AUD. So how in the world does AUD make the money when USD had the majority? Because they are trading the same way we're trading, okay? All they know is there are orders to fill, and there are levels to this too. And I don't want to hurt your brain too much, but now if they know that this is happening, USD for an example, what they will do is they will take this number here, right? And they will say, out of the 110 sell positions on USD, I wonder how many can be traded into AUD. So they'll take their AUD and they'll trade it for USD. Then they'll take their USD and trade it for GBP. Now they have the GBP and it adds to this number, which then comes into the overall net. So it went from AUD to USD to GBP and it adds to the net number of 172. They do the same thing with NZD, the same thing with AUD, the same thing with USD, the same thing with JPY, the same thing with Euro, the same thing with CAD, the same thing, right? And they just trade those. If that trade has to take connecting flights, let's talk about the airport for a second. I would love to have a direct trade, just AUD and GBP and AUD. And if we had that much volume for just those two currencies, that would be awesome. and it would be a smooth trade. Well, how would that play out on the chart? It would just be boom, boom, simple, easy move, just an easy trend, no big deal. But because there are so many currencies at play, and there has to be connecting flights, if you would, connecting transactions, if you would, because not every one of these 172 orders, these net orders, are GBP to AUD or AUD to GBP. So because they're not all just involving these currencies, what has to happen is there has to be deals made. And so the buyers of AUD have to buy the sellers, I mean, of AUD have to go and buy other currencies that will correlate with the GBP move. And the overall net number in that 172 illustration, what happens is price is moving up. Price is moving up. But there are multiple connecting transactions that have to happen. The NZD money comes in, the USD money comes in, the Euro money comes in, the JPY money comes in, the CAD money comes in, the Euro money, all that, right? All these monies, the franc, you know, all these monies come in together. And what happens is that's all of these currencies being traded into this currency so this transaction can happen. That, my friends, is called a base. I said all of what I said in the last 30 minutes so that I can help you understand why, not just what is happening, but why it's happening. Because if we are going to master the market, guys, I'm not training you so you can make, I'm not training you so you can make a few bucks. I'm not training you so that you can make a YouTube video and say, ooh, I know a moving average crossover strategy. I'm training you to be a professional trader. Somebody posted in the community, I don't remember who it was. If I remember, it might have been, what's her name? Lavanda. Forgive me if I butchered your name, forgive me. Lavanya, I believe it was her that posted in the community today or yesterday when she joined that she knows some things about trading. She's had some success, but now she's ready to become a professional and make this a full-time career. That, Lavanya, that's what I'm doing for you. That's why I'm teaching you this and not just how to follow a candlestick. I want you to master the market. I want you to be, by the time I'm done with you, you can go to Wall Street and go get a job as a trader on Wall Street, not just somebody who's following an MT4 chart, right? That's the difference. I'm trying to empower you to not just know what, but to know why the what is happening. Okay? So when you start to see all of this stuff happening right here, all of these multiple transactions, that's what this is. This is called accumulation. Now, if anybody wants to take a picture or a screenshot, go ahead. In fact, I'm going to do it myself. You can take a screenshot and I'll send it to the community for you. All right, there's a little screenshot and I'll send it to the community later. But I'm about to delete this if you're done, okay? But here's the thing. All right, so I'm deleting it. Here we go. So here's the thing. Let's get back to this now. All right, actually, let me do it this way, okay? And I'll even do one here. Here's what happens. All right, watch this.